Okay, so today I want to share with you guys my full investment portfolio update for the month of March. We'll discuss both my Vanguard UK and Trading 212 investment portfolio, which is a mix between diversified funds and individual stocks too. And towards the end of the video, I'll be investing about £500 or £600 into the portfolio itself, so be sure to stick around for that. Okay, so let's kick things off by talking about my Vanguard UK portfolio. The current portfolio value, as you guys can see, is £11,045 on the dot, minus about 20p which I've got held in available cash. Now all of that money is actually invested in my largest holding, which is a Vanguard VUSA S&P500 ETF. Now for those of you guys who are completely new to investing, the S&P500 ETF simply tracks the overall performance of the S&P 500, which is the top 500 companies in the United States of America. And it includes all of your blue chip stocks like Apple, Amazon, Microsoft and Walt Disney, along with another 490 some others. Now it is a very well diversified fund that in the past 123 years has actually provided an average annual rate of return of 9.77% per year. So from a performance perspective, it's certainly very strong, or at least historically speaking. Now for context, if you'd invested $100 in 1900, today it would be worth $9,789,827. Now I appreciate that nobody watching this video will have been investing in 1900. However, it does certainly give me a bit of confidence for the long-term overall performance of this specific investment. And when we look at my own portfolio, well, as you can see, I've got a personal rate of return on the account of 70.53%. And actually, if we just dip into the overall performance, you can actually see since the very start of the year, I'm up about 2.23%, which is the equivalent to £241.35. And you can see just how the investment portfolio has fluctuated to the upside and to the downside over the past couple of months. And whilst I do no longer invest in this Vanguard UK portfolio, actually I can still continue to increase my exposure to this exact fund, but over on Trading 212. So now let's dive into my Trading 212 portfolio and see what's going on over there. Now believe it or not, my Trading 212 portfolio is up about £1,000 or so since my last portfolio update, which I did on this channel back in February. And as of right now, we sit with a total portfolio value of £26,781. Now thanks to some rather chaotic market conditions, this investment portfolio has fluctuated quite massively in the past 12 and a bit months or so, with the absolute peak performance of the portfolio being up £7,157, the equivalent to 35 and a little bit percent, right the way down to the very worst performance in this portfolio where we were down £5,786, and now we're at somewhere in the realms of about break even or just shy of break even and down about 1.8%. And even in the past month, we've seen quite a lot of volatility within the portfolio itself. You can see just by scrolling through this kind of time lapse of performance, if you like, how at the worst case we were down a couple of grand. I think even earlier on yesterday or a couple of days ago we were back up into the green again. It hasn't quite registered here, but you can see we've been close or hovering around break even for the past few days. Now one of the reasons for this volatility, especially in the past month or so as well, in the broader macroeconomic environment, lots of things have been going on. We've had the collapse of Silicon Valley Bank along with the upcoming Fed rate decision, which also caused a little bit of volatility too. Now that Fed rate decision, which came out a few days back, actually came out with the Federal Reserve hiking interest rates by another 25 basis points, which is the equivalent to another 0.25%. Now the reason why that's important, or at least important for this investment portfolio, is because, as Warren Buffett once said, interest rates are like gravity on stock prices. Essentially, the higher that rates go, the more that stocks will come down in value. And with that, I certainly feel like the stock market still has a very heightened sensitivity to any of the macroeconomic metrics when we think about inflation, interest rates, unemployment rates, as well as corporate earnings too. So with that in mind, let's dig into the portfolio in a little bit more detail and discuss the individual holding and exactly what I'm going to be doing with them in the future. Now a bit of a fun fact for you guys, only 6 of the S&P 500 constituents have risen in value by over 50% or more so far this year. And thankfully for me, I've got 3 of them within my investment portfolio. Those 3 stocks being AMD, Tesla, and Meta. But actually most of the holdings within this portfolio have actually bounced back quite substantially, especially based on last year's performance. And don't get me wrong, I certainly need all of the gains that I can get, because during last year this portfolio got absolutely battered, as I showed you guys. Now I certainly don't want to sugarcoat this by talking about just year-to-date returns so far, because actually in the past year and a bit or so, investment returns have been quite difficult. So let's quickly whiz through the individual performance of all of the holdings that I have, and then we'll talk in a little bit more detail about the year-to-date performance of all of my investments. So first up, we've got Advanced Micro Devices, which is up 24.5%. We've got Amazon, which is down 29%. Apple, which is up 33.6%. Meta Platforms down 18%. Palantir Technologies down 60%. Tesla up 12.9%. Unity Software down 77%. And the Vanguard S&P 500 ETF, which is hovering around break-even, down just shy of 1%. Now, of course, my personal performance is based on my cost basis. But now let's take a look at the holdings within this portfolio from the best performers year to date, right the way down to the worst performers year to date. So right at the top, we have Tesla with a monumental year-to-date performance of 75.63%. Now, aside from getting an upgrade on their credit rating to now being investment grade, what exactly has Elon Musk done in order to put a rocket ship up Tesla's stock price? Well, Tesla certainly started the year off positively with record revenue and a beat on earnings, which very much started the recovery in momentum. And whilst we're on the topic of momentum, it's certainly something that Tesla have needed, especially driven by the fact that Tesla's stock price actually dropped just shy of 76% from the absolute market peak at the end of 2021 to the absolute lows of the market of January 2023. However, what's also very clear to see based on the relative strength index of this indicator down here, you can actually see that Tesla's stock price was heavily oversold, especially during January. And even now, even with this upside momentum of some 75%, we're still only in the mid-range and we're still not in overbought territory. So because of that, there's still certainly plenty of scope for Tesla's stock price to head towards the upside. Then we have Meta, another impressive year-to-date performance with returns of 62.4%. Another stock that's certainly riding the wave of tech stock resurgence in 2023. Now what's even better for Meta investors is the fact that over the past few days or so, there's been talks around the potential for a TikTok ban over in the United States because of some controversy that apparently the information and the data that they're gathering from US consumers is being passed on to the Chinese government. Now the reason why that's huge for Meta Platforms is because it destroys Facebook and Instagram's perhaps their biggest competitor in the form of TikTok, which is obviously beneficial to them because TikTok was certainly taking away attention and engagement and advertisement revenue away from Meta Platforms' existing social media platforms. Morgan Stanley have actually come out and said that the ban of TikTok could cause Meta's stock price to actually rise 25%, which is certainly something that I'm not complaining about. So the sooner that we can ban TikTok, the better. The third top performer is Advanced Micro Devices, which is up 55.03% year to date. Now, along with their acquisition of Xilinx last year, AMD continue with their global business expansion plans, with new facilities being opened up in Malaysia. Also, the semiconductor industry is one of the fastest growing industries out there right now, with a compounded annual growth rate until 2029 being forecasted to be 12.2%. So for me, AMD still remains a very attractive investment, and it's the reason why I continue to cost average into the stock despite the fact that it got absolutely hammered during last year. Coming up in fourth spot, we've got Palantir Technologies, which is up 29.58% year to date. Now this stock, and another one which I'll talk about in the investment portfolio in just a moment's time, is a stock that certainly is suffering the most during these current adverse market conditions, and that's thanks to rising interest rates and high inflation too. But despite that, with the growing interest around artificial intelligence and big data, and understanding that data can potentially make better business decisions and government decisions too, I think Palantir are certainly really well placed to benefit from that over the long term. I don't think it comes as any surprise to see Palantir securing deals left, right and centre, and with them actually achieving their first quarterly profit, I'm certainly hoping that there's more good things to come for the stock, because being honest, we've got a long way to go just to get back to break even. In fifth spot, we've actually got Apple, who are up 26.76% year to date. Now for me, Apple are just such a powerhouse with such unprecedented impact on the whole world. I think personally they'll just continue to go from strength to strength. They've recently come out and said that they're going to invest $1 billion into the film industry in order to help push sales, I guess you could say, of their Apple TV. And with a company that's got that kind of money that can just kind of turn on a new revenue stream, or at least help facilitate a new revenue stream, I think certainly for me as an investment, it's very much appealing. And when we actually look at Apple's stock from a technical perspective, I also think we're actually quite close to quite a critical point within the market, whereby, as you guys can see, the stock has actually been in quite a corrective fashion over the course of the past year and a little bit, whereby we could potentially be looking at breaking this channel, especially where the stock price currently is right now, and potentially returning back to all-time highs of $180 per share, or perhaps even beyond. So hopefully a major bull run could be back on the cards over the coming year ahead. Coming in at 6th spot, we've got Amazon, who are up 14.4%. Now Amazon admittedly are struggling, especially with high levels of inflation really impacting their cost basis, which is extremely hard for them because they're a business that runs already with razor-thin profit margins. And because of that, they're having to take quite extreme cost-cutting measures by actually laying off somewhere in the rounds of about 18,000 employees. Now, based on Amazon's workforce, which is about 1.5 million people, that is admittedly only about 1% of their overall workforce. But nonetheless, it still very much remains tough times for Amazon, especially with their current price-to-earnings ratio, which is certainly inflated because of the reduction in corporate earnings, which is certainly making Amazon a less appealing investment at current market prices. Coming up in 7th spot, we've got Unity Software, which are up 7.84%. Now, Unity Software, just like Palantir Technologies, is another stock that will continue to struggle in these current market conditions. Now, for those of you guys who haven't heard of Unity Software before, well, they're a video game software company that helps building of virtual reality platforms. In essence, it was a Web 3.0/metaverse play that hasn't really played out all too well. The stock is still hemorrhaging through cash with huge losses across the board. And if it stands a chance of any kind of long-term success, then we're gonna need to see profits sooner rather than later. But unfortunately for me, based on the price that I bought the stock at, it could be a very long road ahead in order to just see any kind of return on investment. For me, that might just have to be a mistake that I have to take on the chin. Last up, and finally, we've got the S&P 500, which is up 2.89% year to date. Now, as I said at the top of the video, average rates of return for the S&P 500 are about 9.5% per year. So to say that we're quite close to a 3% return just in Q1 of this year certainly suggests that we're actually making quite good momentum, especially if we extrapolate that out over the course of the whole year. But, and hopefully I won't burst anybody's bubbles here, I don't think we'll see a 9.5% average rate of return achieved during 2023. For me personally, I still think there's too much negative sentiment around the stock market on the whole, and still a lot of macroeconomic challenges that we're still far from overcoming just yet. A forecast from Vanguard actually suggests that we could expect to see closer to about 4.7 to 6.7% returns to the S&P 500 over the course of the next 10 years. So I don't think this year will probably be any different. I think just a general observation, when you're investing, especially the experience that I've had, you have to take the rough with the smooth. We're certainly in a period of harder times and lower market prices. But as we've also seen in the past century, market cycles change and better times always come around. So with that in mind, now let's make some final investments into my stocks and shares ISA for this tax year. Starting off with AMD, we are going to buy 0.5 of a share for £39.97. Then we're going to buy 0.5 of a share in Apple, which is going to set me back £65 and a penny. Next up, I'm also going to increase my position in Meta Platforms, again by another 0.5 of a share for £83.59. Then we're going to invest in the Vanguard S&P 500 ETF. We're going to top this up with an additional 5 units for £304.86. So that said, guys, that's my full investment portfolio update for this month. Be sure to let me know down in the comment section what you guys are currently investing into, and if you are interested in getting started investing and using the Trading 212 app, well, I'll leave a step-by-step tutorial on how you use the app in this video here. But before you go, guys, be sure to subscribe to the channel, be sure to like the video as well. With that being said, I'll see you over in the next one.